Hello, and thank you for joining us at XM.com for this Forex Preview video. I'm Cristina Marujos. Joining me today is Senior Investment Analyst Rafi Boyajian. We'll be looking at the U.S. jobs report out on Friday. So we have crucial data coming up in shaping expectations for the Fed and the dollar. Now, markets expect to see non-farm payrolls more than double in June compared to last month. Do you think the report will live up to the expectation?
Well, that is the consensus. Of course, in the May report, that was rather disappointing. We saw jobs growth fall to just 75,000. We're expecting a fairly decent rebound to around 160,000 in June. But of course, the other thing that the Fed watches very closely is average earnings. They were just 3.1% in May. They had been moderating in recent months. We're expecting a slight tick up to 3.2%. Of course, that would be positive if that is confirmed, but still not enough to, as far as the Fed is concerned, to lift inflation back towards its 2% target. So even if we do see the numbers coming as expected, it's unlikely to significantly alter expectations about future Fed policy.
Well, speaking of the Fed, many consider a rate cut in July by the Fed a done deal. Now, do you think this report will determine how aggressive or not that rate cut will be?
So that is the big debate among traders, whether the Fed will cut rates by 25 basis points or 50 basis points at its meeting at the end of July. So far, we haven't really had any indication from the Fed that they would go as aggressive as cutting rates by 50 basis points. So this data should provide a very big clue as to what direction the Fed is headed.
I see. And finally, let's have a look at the dollar. It picked up after the G20 summit. Do you believe the data from this report will further support the greenback?
So we had a bit of optimism following the G20 summit that helped the dollar rebound. But now we're seeing some of that optimism fade a little bit because, of course, the trade war isn't over. We just had a truce, and it could be months before any sort of agreement is reached. And so once again, Treasury yields are under pressure, and that in turn is weighing on the US dollar. So unless we see a very strong jobs report, it's unlikely to significantly alter the outlook for the greenback, at least in the short term.
I see. Rafi Boyajian, thank you for joining me today, and thank you for watching us at XM.com.